Good afternoon and welcome to GrainTV. It's March 22nd, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip here. See how the grains closed out the week on a Friday. As we can see, we had corn trading off 7 cents. Soybeans for the May delivery down 9.5 cents. We had Chicago wheat trading up 1 1/4 pennies. Kansas City wheat up just half a penny. If you guys want live quotes over at your home or office, visit us at grainhedge.com. You can take a no-obligation demo of the trading platform that you see here on GrainTV. And right now we have a special going for any new account signed up before March 28th. If you open up a brokerage account, we'll give you 4 free trades and reimburse the cost of the wire to fund the account. So visit us over at grainhedge.com to get started or give us a call here at the office. But you know, Brock, it seemed like fundamentally today we didn't really have a lot of news that was pushing around the front months that much. Certainly it seemed like it was a relatively quiet trade. In general, the market's really focused right now on next Thursday's planning intentions and quarterly grain stocks report. Today we got some important numbers out from Informa, basically foreshadowing what we might see next week. Can you kind of break down what Informa came out with here today?
Informa did release their most current estimates for planning intentions in next Thursday's report and what they intend to see from the USDA. What we're looking at here is basically a table of what the current estimate is, what their previous estimate was, and then what we actually planted last year. So, you know, a couple numbers I'm looking at here is the acreage increase for corn that they're projecting, about a 1.4 million acre increase there. Soybeans, they're projecting about a 2.4 million acre increase. And cotton is a big number to watch as well, as they're actually projecting a decrease by about 2.2 million acres. So really the difference there is an increase overall by about 2 million acres for corn and soybeans if you net out the cotton acres that they're reducing by. So I don't really know where these 2 million extra acres are going to come from. Are they going to come out west where we've been marred by drought for the better part of a year? Right. If they do come out west, you know, those are most likely going to be marginal acres, and that's really not going to add to the overall yield substantially for the greater part of the United States.
Right. You know, the bottom line right now is that it seems like coming into this report here last year, it seemed like kind of a similar situation. The market was expecting very large acreage for both corn and soybeans. You know, and if we look at this table again here real quick, expectations are not only from Informa but from a couple other people for soybean acres to be increased by quite a lot, possibly even 5% larger on soybean acreage. So that's something to keep a very close eye on. But the bottom line is that right now it seems like the new crop contracts are really going to be kind of fighting an uphill battle here, it seems like, in my opinion. I'm wondering if after a large acreage number comes out, you know, where is the fundamental news? Where is kind of the bullish incentive to really push this thing higher until we get into a potential weather market this summer? So I think that right now might not be a bad time to get in some protection on the new crop. You know, as I said, it seemed very similar. Last year, the market was just kind of grinding lower until, as we all know, we had the drought of 2012 really rallied those new crop prices. So that's something to keep in mind here. But next week, we're going to be breaking down the numbers in detail, coming into the planning intentions report there on Thursday. On Thursday, additionally, we will be getting the quarterly grain stocks report. So certainly new crop contracts are going to be watching planning intentions very closely. All the front month contracts are going to be largely driven by that quarterly grain stocks number, kind of tracking the disappearance of corn, soybeans, and wheat here over the last quarter of the marketing year. Brock, can you kind of break down today? One large important number that came out was the cattle on feed number as it relates to disappearance. Can you kind of break down what we saw there?
Yeah, over the last couple of reports, USDA, they have actually increased the feed use of corn pretty substantially over the last couple of reports. Right. And today we did get the cattle on feed and what we're looking at for inventory there. Let's take a look at this chart here real quick. You can see that the blue line is actually what we were seeing for cattle on feed last year at this time, and the red line is what we actually see this year. So, you know, year on year we're actually experiencing about 13.5% lower number than what we were last year at this time, and analysts were expecting about a 9% decrease. So we're actually quite a bit lower than even the lowest number on the analysts' projections. So to me, that, you know, the question this kind of raises the question of, you know, where is this extra feed going if we see such a substantial loss in the actual cattle that are being fed in inventory right now?
Certainly, that would be a concern for any corn bull out there looking at the old crop contracts. You know, another question I think that needs to be raised about just general feed usage is how much substitution of wheat are we seeing right now for corn, especially in these large feedlots. We had a story earlier this week that one of the largest feedlots in the U.S. here with locations in Texas and Kansas is now feeding almost exclusively a wheat ration to their to their cattle herd. So certainly that's not good for usage of corn, and certainly the incentives are in that market right now for wheat to be fed rather than corn. Right now we're seeing in the cash market about a 33-cent discount in terms of spot wheat prices compared to spot corn. So certainly the economic incentives are there for these large feeders to be feeding wheat instead of corn in those feed rations.
You know, that's kind of a recent development, so I don't know if this will show up in this quarterly grain stocks report,
right,
but something definitely to pay attention to as we move further along this marketing year.
Absolutely. We'll keep you posted on that here on GrainTV, but you know, Brock, in general, I think that's kind of wraps up the action that we saw here on a Friday. You know, as we said, if you guys want to get live quotes at your home or office, visit us at grainhedge.com. And as we mentioned, we do have a special going right now for anybody interested in opening a trading account for free trades, and we'll reimburse the cost of that wire to fund the account if it's open here before the big report next Thursday. But like I said, thanks a lot for joining us, guys, here on GrainTV. Have a great weekend. We'll see you back here on Monday.